Hello traders, Gary Wagner here at just about 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, April the 15th, 2021, and this is the daily report for gold and silver. Both gold and silver prices surged dramatically higher for a number of events. We list that in the opening letter. We also sent out a special trade alert recommending that we raise stops. I am excited about today's show, which is a shortened version, but more excited about an interview that I did yesterday. I was on the panel of mugs and metals. The link to that, of course, is below the video that you're currently listening to. It's about 50 minutes, and I think you'll find it incredibly informative. Our show begins now. Traders, today we witnessed both gold and silver pricing surge as a number of events collectively moved gold and silver substantially higher. Gold, basis the most active June contract, is currently at $1764.40. That's up $28.10 on the day, a net change of 1.62%. As you know, we sent out a special trade alert this morning recommending that you move stops up on gold futures, as well as Forex and the electronically traded funds SLV and GLD. Speaking about GLD gained 1.62%, a total of $2.63 per share, is currently trading at $165.35 per share. Traders, as I said in our introduction today, this will be a shortened show because the show that will follow this is approximately 50 minutes. Mugs and Metals brought to you by Franklin Mint, in which we recorded that yesterday. What I want to do today is simply go over stops and the rationale behind our stop placement. I do believe that there is dynamic room to the upside that is definitely possible. And today we moved our stops up. In the case of gold, we raised it to 1732. The rationale behind that was looking at the 21-day exponential moving average. That is currently at 1738. By putting it at 32, we're putting it well below today's low, as well as that important moving average on a short-term basis. We have absolutely broken through the 50-day moving average. That is solid. Currently, we have interim resistance at the 23.6% Fibonacci retracement, which comes in at 1772.60. When we look at GLD, you can see that that also broke through the 50-day moving average, and it did so with a vengeance. Currently at 165.35, we moved our stop to 162, again, putting it below that 21-day moving average. Silver also had a surge in prices, gaining 1.57% when compared to gold's 1.62%. You can see that the rise in terms of percentage gain was pretty much equal. Silver gained 40 cents, basis the most active May contract, is currently at $25.92.5. When we look at SLV, that gained 1.87%, a total of 44 cents per share, and is fixed at $24.03. Traders, we are looking at a daily chart, this of May futures. We did raise our stops to 25.42, and the rationale behind moving our stops to that price point was that it puts us well below the low that came in today, as well as that 21-day moving average, which really has acted as support today. We can see that it is traded now above the 100-day moving average. It is above the 200-day moving average, and we still need to see it now move above the 50-day moving average, which puts current resistance at $26.11. Traders, lastly, we are looking at SLV, the iShares Silver Trust. That moved up nicely today, gaining 1.87%, and that's 44 cents per share, 24.03. We moved our stops up to 23.40, and as you can see, the 21-day moving average is sitting at 23.54, so it puts us below the low of the last 2 days. My sense is that if these precious metals are going to run, we will see them run with a series of higher highs and higher lows, which is why we've effectively tightened our stop, locking in profits on our silver trade, protecting our equity on our gold trade. Stay tuned for Mugs and Metals. That will be premiering shortly with Miles Franklin Mint. I am one of the panelists on that 50-minute discussion about precious metals, and I think you'll enjoy it a lot. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.